Hey, good morning, everybody. Good to be here for you today, with you today. My name is Brent Moores. I'm sitting in for Ben Watson, but he's out right now, and so I'm happy to talk to you about the markets, futures, first look at the markets, and off to a little bit of a rough start, but we'll see. The markets can change pretty quickly here, so we'll take a look, and that's one of the beauties of futures is we can look at different time frames and different aspects of the market and trade long or short. Yeah, there's a lot of variety there. I am joined by Mr. Brett Crowther in the chat. Brett's a good friend of mine, and we've been working together many, many years, and I appreciate him. As you have questions, feel free to type those questions in the chat between Brett and myself. We'll do our best to get your questions answered. Also, just a reminder, we have a lot of different types of webcasts, a lot of webcasts on the Trader Talk Schwab channel. Futures, options, stocks, fundamentals, technicals, crypto, ETFs. So the way to find them all is to subscribe to that Trader Talks channel there. Now, before we get too far into this, let me just mention a couple things. One, you can follow me or Brett on X at Brent Moore CS, at Brett Crowther CS. And also, just remember, futures and futures options trading involves substantial risk. Not suitable for all investors. You do need to be approved for it and make sure you read your risk disclosures there. Futures accounts are not protected by the SIPC. And, futures margin, also known as a performance bond, is the amount of money you're required to deposit into your futures account to establish and maintain a futures position. Each futures position is going to have a different margin requirement. So just I can show you where to check that out. All investing involves risks, including loss of principal. And for some products, a loss of more than your original investment. Stop orders are not a guarantee of execution. And keep in mind, with futures, they're not guaranteed to fill at all because of protection points there. So you just need to be extra careful on that. Virtual currencies are a digital representation of a value that functions as a medium of exchange, a unit of count, or store of value, but it does not have legal tender status. Today's material is for general informational and educational purposes only. We'll be using the Thinkorswim desktop software today. That's for educational purposes only. And past performance is no guarantee of future results. We'll do technical analysis, but Schwab does not recommend the use of technical analysis as the sole means of uh, investment research there. So let's look at some different futures. We're going to look at some different futures contracts across different asset classes, different types, different time frames, and we'll try and play some example trades. One of the beauties of futures is, hey, the variety of what we have, because when some things in the market are doing well, say crude oil going up, other things such as maybe the Dow or S&P 500 not doing so hot. So, we'll take a look at that here in just one sec. So let's start you off. Here's the ES or the micro ES future, which it represents the S&P 500. We're off today. And, maybe not totally unexpected, I guess, in that we've had a general trend up. This is a 20-day and a 50-day moving average, by the way. And, after you get a run up, a lot of times you get a pull back, and that's what we're seeing right now. Right now, we have 3 days in a row. Is this a support level that we're going to hold? Let me just zoom in just a little bit here. There's the lows, and I'd kind of consider that kind of a significant level. We'll see throughout the day where that goes and whether we can hold that level by the end of the day. We'll also look at some more intraday stuff here on this. But just as we're getting started out, I just wanted to look at the major market indices. So down, S&P 500 futures down about 0.6%. Given the pullback in the market, what I would expect is if the S&P 500 is down zero point 0.6, the NASDAQ would be down even more. And that's exactly what we're seeing, about double that. That's just typical. When the market's going up, the NASDAQ futures tend to go up more, tend, not always, tend to go up more than the S&P 500 futures. And when it goes down, they tend to go down more, just more volatile. Kind of a similar situation here, right at the 20-day moving average on that. Will that hold throughout the day? We'll have to see on that, but we're getting that same market sell-off. We also don't have the same trend that we have on the NASDAQ, for example, as we have on the Russell 2000. Here's, well, I'll just do R2. Here's our Russell 2000. Again, a little bit of a pullback down about the same as the ES. And, so this has really been the strong. This was actually an all-time high we hit, I think, yesterday on that. So there's your Russell 2000. And just for completeness, let's look at the Dow. Here's the Dow futures, kind of a more pronounced pullback. Are we going to get a bounce there? No sign of a bounce yet. If you want to do a trade on this, the way approach some technical traders would take would be, hey, this has gone, the general trend has been up. We have a 20-day moving average that, could potentially act as support, but no guarantees. It didn't back here. It didn't here. But the point being is the market goes up and then it kind of goes sideways or down a little bit. Okay, right? It goes up, down, or sideways. You can call that a flag if you want, but that's what's happened. It goes up. This seems to be a repeat process. So if this is the flag we're looking at, one approach is to say, I want to get in. I think this is going to bounce, but I'm not confident yet. Okay. I'm not confident yet. And I want to see this break above a certain level before we jump in. And if it breaks above that level, I'm going to go long the futures contract. And then what I'll do is I'll say, well, I want it to go up to a certain level, and we'll put a target price up there. Okay. And then I'll also put in a stop. So let's do that just as an example here. And so first of all, I'm just going to zoom in just so we can see it a little bit earlier. But the premise of the trade is this. And despite the market going down right now, we'll look at some bearish trades as well. I'm actually going to do a bullish trade, but I'm not going to do the bullish trade yet. I'm waiting for the bounce. And I'm waiting for a breakout above a certain level. And that level can be, you can just kind of like draw a flag pattern here if you want and do that and say, hey, if I break above this level here, then I want to get in. Okay. Another approach to do it is just to go off the high. I'm going to go off the high of the day. And if we break back above this, I'm going to get in at that point. So here's the approach on that. If you want to buy, but you're not you only want to buy if it goes above a certain level on the futures contract, we're going to do what's called a buy stop order. Now, for a lot of you, you're familiar with stops. And the thing you know about stops is, well, stops kind of get you out if you're in trouble, you sell out, and they're not guaranteed, of course. Well, buy stops are kind of the same deal. They're not guaranteed, but they don't get you out. They get you in. And they get you in if it goes above a certain price. Now, sometimes I have newer traders especially go, why would I ever want to get in at a higher price than the current price? And the answer is because we want to wait. We want to wait until we clear a certain hurdle. And that hurdle is a price level. Maybe it's a resistance, maybe it's a break of resistance, maybe it's something like that. So what I'm going to do is I'm just going to say here, this is the level. I want it to break above this level here, okay? So I'm going to do this, and I'm going to say, if we can break right above that level, I'm going to get in, okay? And I'm just going to jot down that price. So I've got 5, 3, 7, 8, 4. That's our buy stop level. Where's my target? Well, my target, I'm going to go with the length of the flagpole. Well, here's the flagpole. Okay. There's the flagpole. Now, if you want to be more aggressive, what people will do is they will add the flagpole to the breakout point. I'm going to be a little less aggressive, and I'm going to add the flagpole to the bottom. In other words, what I'm going to do is I'm going to say, this is how big it was from low to high. I'm going to go from low to high again and say, I'm looking for this to go up here to 5, 6, 4, 6, 5. I'm just jotting that down. That's my target. This is not a day trade. This is not an intraday trade. This is a longer term trade where we're getting in. Now, it may never get there. We're going to hold off, and at some point we're going to put a stop in initially, and we'll probably move that stop up along the way. I'm also going to put in a stop order. And I'm going to say the stop order is going to be below. We're expecting a bounce here. So I'm just going to go a little bit below that, give it a little wiggle room. And I'm going to put a stop in below that level. You can go like 1% below that level. That's kind of a common way to do it. You can use an ATR if you like. That's a common way to do it, average true range. But that's going to be my sell stop. Now, what happens on a sell stop? If it goes down to that level, what it's going to do is it's going to try to that level or below, it's going to try and sell out as soon as possible. However, there's no guarantee of what price it's going to sell. First of all, it could it could go um, it could go down significantly. And then is it going to fill at the stop level? No, it would be more likely to fill at a lower level. But there's also something called protection points where in volatile markets with big moves, the sell order may not fill at all. The sell stop may not fill at all. So you just need to be aware of that with futures contracts there. I wrote down the pertinent information here. If I want to do a trade, what I can do is I can either right click on the chart and go to buy custom with an OCO bracket. Okay, buy custom with an OCO bracket. This is the trade setup right here. First trigger is OCO. The first order, let me just kind of minimize this over here so you can see it. The first order is a buy order. We're going long, we're bullish if it achieves certain conditions. The conditions are going to be met with the buy stop. Well, I just click on stop. Here's the buy, here's the stop, and I could leave it for the day, but I'm going to go past that a little bit. I'm going to go to good till canceled, and I'm going to let this go on beyond today. And my buy stop price is the price I jotted down earlier, which was 53784. Okay. That is a buy stop order. It allows you to be bullish, but even if you're not ready yet to get in the trade. Here's my limit. The limit price is the target price. That's true if you're doing a long order. That's what we're doing, going long and putting an order to sell out at a target price. That's a limit. Or if we were doing a short order and putting a target price below it, we'd still use a limit order in that case. These are going to be good till canceled as well. So I'm just going to mark these all as good till canceled. My limit price is going to be the price I previously jotted down on my paper, so I don't have to keep on going back and forth. 56465. Okay, now one thing we're going to have to do is we got to make sure we see how much we're potentially gain and how much we potentially risk on this trade. We're going to do that in just one sec, but let me complete this. Here's our stop order, and our stop order is going to be at 52972. Okay, click enter here. So if our entry order is, I'm just going to switch real quick here. I'm going to just minimize that for a sec. I'm going to do this, and I'm just going to kind of use a little bit of a whiteboard here. And before I do that, let me go back and just say our point value is about 50 cents a point. Okay, you can see that right now. Tick size is 1. That makes it nice and easy there. So tick value is 50 cents. 50 cents per point. Let's talk about how much we could potentially make or lose, because that's an important factor here on this. So let me just kind of go back to this. If our entry point is 53784 and our target price is 56465 and our stop, again, no guarantee this is going to fill, but 52972, what's our presumed amount we're going to gain if things go well or lose if things go against us? Well, I'm going to take the difference there. I got my calculator out. 56465 minus 53784 is equal to, that's the difference between my entry price and my target is 2681 divided by 2, because it was 50 cents per point. Okay, 56 per point. So that's what? 1340. Okay, that's how much, if everything goes great and we hold all the way to where we get our limit order, that's how much we'd be making on that. Our stop is going to be the difference between the 53784 minus 52972 is 812. So it's going to be 812. Divide that by 2 because it's 50 cents per point. That's 406. You see, I don't even need a calculator on that one. 406 on that one there. Okay. So that from this point, we can just say, well, here's our reward to risk ratio. Now, it may not be a super, the highest probability trade. It's easier. This has to go less distance to get from where it's at or where we're entering. So we may not even get in this trade to our target. Well, it has to get less distance to go to the stop than it does the target. So we'd say it's not a high probability trade, but our reward to risk is good on that one there. Okay. So that's how that works. Let me get out of this. Let me go back to here. I'm going to confirm and send. Just going to look at this, make sure it all looks good. Now, I'm not factoring in commissions or anything in this, so just be aware of that. And then I'm going to send that order. Is the order filled? No, the order hasn't filled because we're waiting for it to go up and hit our buy stop. Okay, so there's that. Let's move forward. So that's just the market as a whole. Of course, you can do, there's other aspects of the market we can look at. Here's crude oil. This, unlike some of those major indexes, is actually looking fairly strong. Is this something you would consider entering right now? Well, maybe we could look at that. Here's another thing. I mean, you can go down your list. And by the way, I mentioned something I want to bring up here again in one sec. I have a futures list. I have a micro futures list, watch list. You can always add that and you can scroll through those. If you want to know what the initial margin value is on these, click right here and go to futures, and you can see them listed right here as you look through those. Okay, so that's just kind of a little trick on Thinkorswim that you can do to look at that. But let's look at some of these others. There's, there's a variety of futures. There's currency futures. Here's Aussie dollar. That's a strong trend. Technicians often like to see trends like this. We've got a 2050 crossover. We have higher highs, higher lows, and you can look for things like support and resistance, but as well, but you can draw trend lines on there. Canadian, here's the Canadian dollar, okay? Canadian dollar's going up. And let's go to, here's the euro. So these currency futures are ones that, you can consider, but keep in mind currencies fluctuate, and just like everything else, you have the same risks there. But here's one that I want to point out because this is a big part of the news, and big part that possibly is not helping the market, although the market has been going up for the most part. We've had a little pullback in it, despite the 10-year yield. Here's the /10Y, okay? So this is the 10-year yield contract. And if you don't want to look at the futures contract, you can always go TNX:CGI on the chart. And this is what the 10-year rate is times 10. So if you want to know what the 10-year rate is, 10-year yield is, just move the decimal point over a spot. But it's been this steady march up. Now, at some point, I'm guessing things will turn around, but right now it hasn't at this point. So one of the kind of nice things as you look at these futures contracts is there's like so much variety. There's currencies, there's metals. We haven't even looked at metals yet. We'll look at gold and copper here in just a minute, and silver. There's the major index futures, and it's pretty rare that everything is going down. And in this case, we have something like the 10-year. Now, I don't think is there a this is the micro 10-year. Okay, this is the micro 10-year. So here's our point value. And I probably should have done this at the get-go on the last one that we were looking at. I did it at the end. But consider the point value and consider where we're at in the chart. I mean, if we're at 475 on the chart and we're going, well, I think this is going to go up to 4.8 or something like that. Well, that's 0.05, okay? 0.05, point value is 1,000. So if I go 0.05 times 1,000, that's $50. Okay, so that gives you a sense. Or if you're looking on the downside, well, I think if it's going to go down and I'm going to get out down here around, I don't know, 455 or something like that. Well, that's a 20-point drop. Well, excuse me, a 0.2 drop. And so we're going to go 0.2 times 1,000. That's $200. Make sure it's not too rich for your blood, so to speak, on these contracts. That's why a lot of times you'll look at micro futures on that. All right. So let me go here and let's go and let's consider it. I'm going to switch to maybe in a minute looking at some shorter term time frames, but I'm going to continue with the general trend on this. And I'm going to start with the technical analysis. Trend is up. We've had higher highs, higher lows. And I'm going to consider this a support level right about here. I'm going to go, I'll go a little bit below the support level as a stop on that. I'm going to go and say, I'm going to continue on with this. And maybe I'll leave this open-ended and not even put in a target price, but we'll move the stop up occasionally on this. And as long as the 10-year goes up, we're going to plan on trends up. We're going to plan on sticking with it. And when the trend changes, it's changes. We'll get out. We'll look to get out at that point. But so far, when we look at things, the trend has been pretty strong. Now, we may have gotten, if we were in, maybe we would have got stopped out. Maybe we would have considered this a break there. But in general, this can last for a long time. So I'm not going to put in a target price, but I am going to put in a stop. And I'm not going to put in a buy stop because this is looking bullish enough right now to jump in from this technical standpoint. I'm going to put my stop in down. I'm going to say if we break below, say, the 50-day moving average. So about 455, okay? So I'm going to say 455 stop. Well, if we were to get, again, there's no guarantee. If we were to get in where it is right now and get out at that 455 stop, 472 minus 455 is 17 points off of where we're at here, 0.17. Okay, so that'd be about $170 using that point value. 0.17 times $1,000 is $170. Okay, so you can decide whether that is there. Let me go and let's right click. Actually, it's not right click because we did that on the last one. If we go to the trade tab and hold on, I don't want active trader right now. We'll go to active trader in just a bit because I want to show you that. So here's my trade tab, and I can right click on the ask price of the active contract. This is the active contract. This is the one that has the volume there. Buy custom with the stop, not an OCO bracket because we're not putting that target price there on this one. Okay, let me close this down and let's go and we said we were going to get in where it's at. We're going to get out at 4.55. Hopefully. That's our goal, to get out there. I'm going to make that a good till canceled order. When I do get in, this is putting it in at a mid price, and natural mid are going to showing the same thing. That should probably get us in. I'm going to confirm and send, and then I'm going to send that. Of course, futures can change pretty quickly, and I'm going to send that order in, okay? So there we go. We now have that as well. Now, let's look at some other charts, and then I want to switch to a shorter term time frame here. So let's look at some others. We said we looked at some currency. We looked at 10-year. Let's look at some metals. Copper, trending up, okay? Down today, down 1.3% today. So again, if you're looking for something a little bit more bullish, a lot of times when we're doing a bullish trade, for example, okay, and we can do a bearish trade too, but if we're looking for something that's a more bullish trade, you're looking for not just like, you look for like the setup, trend, support, and resistance, but also the trigger. When do you get in? And often that is a bounce, okay? Well, this is not a bounce. This is not a bullish bounce, okay? So that's copper. Here's silver. Yeah, silver, which was trending down, has now broken above its 20-day and its 50-day. Plateaued a little bit here, which is fine. That happens. Doesn't go straight up. So is this a trend change at this point? Well, I would say that downward trend where we had the kind of intermediate term downward trend has changed, has been broken, but I'm not sure I'd quite call this an uptrend yet. But once probably if we break out above that, that'd be a potential. I'd probably consider it a potential uptrend. That's a potential entry point for some traders. I'm not going to put that trade in right now. just for time's sake. But breaking above that, doing a buy stop above that, some traders would consider that as a potential entry point. Okay, so silver, let's look at gold. Kind of a similar situation as silver. Often that's the case. You could use this as a breakout point, buy stop as an entry there. Let's look at oil. Well, here's oil. Okay. And of course, oil's tough because so much of it is just geopolitical, um, is geopolitically, uh, driven, I guess is the word on that. So we'll have to see on that there. Um, let me go here and just look on this. Question in the chat. There's a big jump in the open interest rate in the oil on the open interest in the crude oil October crude oil futures contracts. I don't know specifically, although what I would say is we're shifting. You have the active contract that has shifted here recently. And so what people are doing is they roll over the September over to October. Okay, so you're probably seeing just people rolling over contracts there on that. That's my guess on that. That's probably the best I can do for you on that one. I'm not sure in terms of the question there, in terms of why the open interest we're seeing a lot more into October rather than why the big jump. I'm guessing rollover is the reason why. Okay. Now there's so let's look. Did we look at gold? We looked at gold already. There's crude oil, and of course there's plenty of others. Here's your Bitcoin contracts. That's your micro Bitcoin contracts. If you go to when you look at this and you see kind of it's more jumpy, I'm curious if we go to the full-fledged contract. Yeah, but Bitcoin is just that way. But you can sometimes when you're looking at this and you're looking and you go, well, I want some volume on this, right? I want some liquidity on this. Here's the Bitcoin contracts, about 3,000 volume here. If I go to the micro Bitcoin, MBT, you have 14,000. So more people are trading that right now. That's a consideration. If you see something that has, 50, 100 in the volume category, you may have some liquidity concerns on that, by the way. So just something to check out. Most of these, crude oil, gold, stuff like that, liquidity probably isn't as big an issue, but sometimes you'll get into, hog futures or something, cotton futures or cocoa futures, and you're going to find the volumes thinner on those. Let's look at another one. Okay, I want to go here. Let's go to volatility futures. Okay, let's look at the volatility futures. And what I want to do is I want to look intraday here on this. So I'm just going to go to a 1-minute chart, and I'm going to throw some pivot points on that. So you can look at these futures zoomed in. Okay, this is the 1-day movement on these. And what a lot of people do is they'll use these pivot points as potential areas of support and resistance on them. So you can do that here's volatility, which you can see over the past day has increased, pulled back from its high, and I'm going to zoom in just a little bit. And we're right basically at that pivot point right here. You can do a similar thing on some of these others. Let's go to the NASDAQ futures. Here's NQ. Well, it's been going down. You can see the sell-off that we've had. And so when we started the day, what people do is, well, look, here's a potential support point. This is your S1 point. And so so what they'll do is they'll say, well, I'm going to enter a short position here, goes down, and that's a potential target price. When we go through this, that's a potential target price. Now this is a potential resistance price. Just like any other support or resistance, when we're looking at pivot points, they can be target prices or exit points perhaps. But when a support is broken, it becomes a resistance and vice versa. That's how it's typically viewed. Let me go to MES, kind of look at the same thing. Here's the same thing. Now we're at a potential support point. Are we turning around here intraday on this? And so it seems like we're bouncing off that. So if we want to go intraday, I want to get rid of this line because that's an old line. I don't want that to clutter here. So what some traders will do is that, well, here's an entry point. I'm going to zoom in just a little bit more. I'm going to look for this to go up here. Okay, real short term. Look for this to go up here to our pivot point. So that's 77.44. Okay. Here's my stop, or this is my support. If we break below that, I'm going to go to 77.20. I'm going to call that a stop. Now, that's an approach to doing this. Another approach intraday is to say, well, look, the market's been going down for the most part. I have no confidence this is going to hold. But if I'm going to wait until it does hold. And so I'm going to do a buy stop entry and do a short position. Everything I've done today so far has been actually long positions. In other words, we're buying, which are bullish. But if you want to do a short position, you could look for a break below here and enter that short position. But what I'm going to do is I'm going to do a long position, another one, and I'm going to say, well, we're going to look for it to go up here. That's going to be my target price right there. It's supposed to be a T, okay, for target. And I'm going to do a sell stop down here. One way to do this is to go to the trade tab and go to active trader if you want. You can go to active trader and you can see a similar thing. Why am I not showing any? Why am I not showing anything here? Oh, it's right down here. It just got kind of covered up. You can see us bouncing off our lower level here. Here's our S1. Here's our S2 level. We can try and take a target up to that 77.44 here. Okay, so we're trying to do a little reversal in the market here. So I'm going to put this as a target. I'm going to go down here as a stop. And you can do this. Let me get rid of this left-hand column. Let me clear this. So, and I'm just going to expand this a little bit so we can see. Okay. So here's your active trader, AT right over here. So the way on the active trader is you have different buttons here on the right. C stands for chart. So I got a chart. You can bring up a second chart or a third chart. Time and sales, active trader. Well, you do this on an active stock, you're going to see all these filled in here, but this actively traded stock, but this is a futures position. So this is where we're at right now on this. Okay. So this is our pricing right now. If I want to buy, I could immediately buy market, right? Okay. That's one way to do it. I can click on one of these and I could buy, say, down here. It's moving. It's a moving target on me, okay? But I can click down here and it's going to put in an order to buy at this price or less. It's a limit order. It's going to buy at this price or less. We probably would have just got picked up right there on that one, okay? So you can see this is a very active trading type thing. So, that you know what you're getting into in this here. Similarly, if I want to short this position, which we're not going to in this case, but if I want to short this position, I could click on one of these, and um, I could look to um, can look to enter the position here. Okay, I can click there and enter an order. Okay. But what you can see is kind of a battle, and this is kind of fast moving. Sometimes what you'll see is a big discrepancy in terms of what the number is here, and this is changing too quickly for us, but the number is here and what the number is here. And in this case, we'd say we have more sellers than buyers if the number's bigger here, okay? And so some active traders would say, well, that's going to put more downward pressure on that. So anyway, that's how that is. So if I were to click on this order, I'm not actually going to place a trade right here on this right now, but I can click on this. You can see it puts that buy limit in at the price that I clicked on, which was down here. If I were to send that, that'd probably fill pretty quickly because the current price has just moved down below that level here on this. So let me delete that. In fact, I've been yapping long enough that we've actually now broken below our pivot point. So the trade that we were looking at isn't one we'd probably enter at this point because we've now broken below that pivot point here on this. Our goal was to bounce off this pivot point right down there. It was going off this pivot point, and our goal was to hit a target up here. Well, right now we've actually broken below this. So that trade that I was just looking at probably does not make any sense anymore, to be very honest on that. So I'm not going to do that trade. If I wanted to do a bearish trade on that, I can certainly switch up and go, well, I'm going to enter right now. If you want to put in a target price and stop and everything, you can do so. You can go up over here and just click on here, and there's a template here you can click on, and you can say, well, I want that OCO order or that trigger with a bracket order, and put in that bracket order. And when I click on that, it's going to give me the order to put in that bracket order there. Okay, so that's how you do that. Now I'm about out of time here, and I'm not going to switch our trade up mid-range, but when you're trading intraday like this, be prepared for a change. Our initial goal was to enter here, have a target here, but by the time we got in this, we've broken below our pivot point. So this, it would actually be more of a bearish trade we'd be looking at right now than anything. So anyway, I just wanted to, someone had a question last week on Active Trader. This is the Active Trader page here on this you can use. We don't use it most often in this webcast. I know Ben doesn't typically, and I don't typically, but a lot of more intraday traders will do that, but just realize the risks associated with that and how quickly things can move. That's one of the challenges. Things move very quickly here. I want to thank you all for joining me this morning. And I want to thank Brett in the chat. I appreciate him for the helping out there. And everybody, what we did a couple long trades, and we looked at a third one, but the market conditions changed, so we didn't place that one. But hopefully that was helpful. Make sure you subscribe to that Trader Talks channel. And if you like what you saw, we appreciate the thumbs up at the bottom of the page. Helps to promote the webcast, and that's great. So grateful for you all. Have a wonderful rest of the day, and we'll see you all same time next week. Bye-bye, everybody.